Hey guys, welcome back to the 2020 casino called the stock market. Let's review some of our trades today, talk about the game plan going forward. I'm just itching to short the market here, but like I said, I don't want to have my face ripped off. I did take a little bit of SDOW today, SDOW. Um, it's just this market is very, very speculative. I guess here's the scary thing. So we look at stuff like JP Morgan, and these things cannot get out of their own way. And, usually in the market you have rotation, and then exit. So basically the Fed has kind of said, hey, here's some money to go play with. And nobody's playing with some of these old stocks like Boeing and Caterpillar and JP Morgan. And is it because they're not moving and they're going to need more time as the economy, quote unquote, meets the other side and starts to repair itself? Or is it simply that something is wrong here and we're seeing a bubble in other assets and they're kind of ignoring the underlying issues here and these undercurrents that are a huge problem? I'm kind of worried that it's the latter, not the prior. So, I'm not trying to pick on JP Morgan here, but, pretty interesting that this thing's down so far and just cannot get out of its own way. You'd think that if the market was looking for some turnaround stories with the theme on the economy, that JP Morgan would fall into that category. And obviously when we draw a simple trend line here, that it's put a tail through and got back above a 20. It's had rejection twice on my 45-day moving average. I'm using a 45, not a 50, by the way. I'm tightening up some of these moving averages. In fact, I probably should use 180 on this, but that's not really imperative with this chart because it's so far away from the 200-day exponential moving average. But you get the idea. You fail and you can't even backtest the trend line there, and then you start to pull lower. So, does it look like JP Morgan is going to go down and retest this horizontal resistance at 87? Yeah, it kind of does. What it does from there, I really don't know, but it's just not participating. Hey, one day it could be just, they could reach back down and grab these stocks that are not moving. But for right now, they're not touching them. They're not touching the Boeings. This just keeps bumping up again. Same chart, basically, right? Looks like JP Morgan. You break a little bit of a trend line there. Forget about the 45, 50-day moving average. This thing can't even get above its 20 EMA. They just keep bouncing off it and trending lower. No interest at all. They don't care. Caterpillar, same thing. Once again, I'm not trying to pick on these particular stocks. I'm just saying these are old and boring. And channel break, retest, fail. Can't get above the 20. Can't get above the 50. Now you're kind of, I don't even know where this is going to go, to be honest with you. I really don't. But what they are buying is stuff like NVAX. It doesn't matter if it makes, earns money. If it's moving, they're buying it. So, and why are they buying it? They're buying it because it's moving. So this is a $3 stock at the end of last year, and now it is a $25 stock. They lost 58 cents a share. Earnings, I believe, was today after the close. Doesn't matter, though. They probably lost less than expected. And they lost less than last year, $1.13 in the fourth quarter. So people love it. That's all I care about. If it's moving higher, they want in it, and it continues to propel it. This is indicative of a bubble in the market. This is up $34 in aftermarket, okay? Forget about these highs. Forget about this daily. Let's look at the after hours market. It got as high as 38.9. And I'm sure somebody's going to say, well, there's a story behind that. It probably had something to do with COVID-19. I don't know. Maybe they're making some test kits. Maybe they're fast-tracking some cure for it. But the fundamental thesis behind this cannot support these type of moves. It doesn't matter, though, because they're moving and the market's flush with day traders right now. Tons of day traders out there moving these stocks. So, and then, like I said, if people are going to go out and buy stuff, they're going to want to buy the stuff that's moving. They're not going to want to buy the Boeings, the Disneys, the boring stocks that are not moving. They're buying these. So how does that end? I don't know. It's hard to tell, but I can tell you that the S&P 500, we're seeing some definite issues in relative strength. We're seeing some issues on the McClellan oscillator. the narrowing of stocks that is moving the market is increasing, meaning that we're getting a narrower and narrower group of stocks that is moving the market. And that's the story right now. So it's a day trader's market. It's not a buy and hold market right at this point right now, especially if you're trying to buy value. Forget about it. If it's moving, you can buy it. If it's not moving, no one's buying it. So very scary market. That's not the only one. Look at stuff like VTIQ. Let's just go down the list here. As long as we're going to talk bubbles, let's talk bubble. Look at this move. VTIQ base around 1059. Now it's up in after hours, $21. Got as high as 21.53. I mean, you can't even... Now, definitely, if you look at these stocks and we're looking at at our moving averages, et cetera, there's no doubt about it. They look strong. And they've put in nice fundamental breakout patterns. You got a nice separation between your moving averages here. You're so far overbought, though. I mean, 70 is overbought in the RSI, and you're at 86. But it's a game of musical chairs, If you're the last one standing, too bad. Everybody else is making money. So VTIQ falls into that category. KC was our pick from the other day on the IPO. You could have probably got in 21s, 22s. It's at 26. Nice move there. A company that we actually like fundamentally, ITCI. We talked about that today. Buying in the 1960s, you're looking good. I don't know if I mentioned that one because I've been doing a couple videos today. If I did, apologies for being redundant, but ITCI still looks good. Nice chart pattern. At least this one hasn't completely gone out of control, right? Nice pullback today. We said we want to find stuff we can buy in the pullback. 1960, it actually got a little bit lower and closed at the high end of the day. Very bullish action. That's what we like to see. We do have a crossover now on the shorter term moving averages, and we back tested at 200. So this one looks solid. We talked about it on the video on YouTube from last night. I'm not trying to sit here and just pound the table on ITCI, but it's one of many that looks interesting. DFFN is on my trash to cash. This is a horrible looking chart, but short term it looks interesting now because it's actually cleared above some of these areas where, you could say pump and dump, right? You pump it up and it falls down and then retests the 20, right? Ugly, 47 cents a share. And now you're looking at almost a double because in aftermarket, of course, they reported earnings today. Once they get the earnings out of the way, they're like green skies. And I'm not picking on this because I have shares of this. I have 1,000 shares of this. Not a big position, but, I buy them when nobody wants them down here. And I don't sell them. I wait for the big moves. So that's interesting. It's cleared this double top-ish area and obviously has the highest close now because these are a lot of wicks here, right? Open up. This one's holding. So, I don't know. Let's tweak this and make it 180 day. We're doing increments of 45. Market's too short term for these old school 200-day moving averages. So let's say our target price is just under $1. There you go. DFFN. I'm not making a recommendation, but I'm happy to own some shares. CBay. Did we talk about CBay? CBay's up. Lord of mercy. It's up to almost $4 in after hours from a close of $1.84. That'll be on tomorrow morning's Gappers. Moderna Pharmaceuticals. I shorted this today and scalped it and made a little money. What are you going to say? I don't even know. The valuation on this is getting ridiculous too. They lost money, but it doesn't matter. It's probably in the multiple billions of dollars for market cap. Doesn't matter. How about this one? MGNX. I'm continuing with the bubble theme. $28. You could have bought this all day long for $4 a couple months ago. Look at this. This is ridiculous, guys. Musical chairs. That's fine. I play them too. NVAX. Another one. I was going to short this after market. I'm like, what am I doing? This is like, look at this thing after market. There's another one. You could have bought this all day long, $2-3 end of last year. You could have bought this for Christmas at like $2, right? $3. I was looking at this a while ago. Even when I wasn't following the market, I thought this was an interesting stock. I probably would have sold it in here though. I mean, now you're at what, $26, and you're at what, 34 aftermarket. I mean, these moves are crazy, guys. They're hard to chart. They really are. It's just there's no fundamental reason for these to be where they're at. And if they're moving, they're buying them because they're moving, and that's kind of a sign of a bubble, you know. The money is, like I said, the Fed said, here's some money, go play with it, and nobody wants to play with boring stuff. They want to play with stuff that's moving. It's risk on, you know. It is risk on, and this stuff's moving, and they're chasing it. So, where does that leave us on like the S&P 500? Well, we hit our target price, initial 294. I was on Discord today talking about 294 would be the initial target. We double topped there. The market didn't like it, that it couldn't push through there, and they sold it off. Doesn't mean anything. I mean, we created this little intraday wedge right in here, right? And we popped it, and then we back tested the top channel, and then it ran and ran. And it looks like once it broke this top channel area, which may not be perfect on my drawing, it kind of trailed down the rest of the day, because this market's all about movement, and if you can't keep moving, they don't want you. So S&P 500 looks ripe for a big pullback. I mean, the money's rotating out into the Qs. We know that. The Qs look strong still. I don't know how long this can go on, but this is hitting the gap almost, right? Where's the gap? Up at 232 or something? 232-ish is the gap, right? 230. What's the gap? The gap's around 229.30. So maybe once the Qs runs out of steam, the whole market comes down, because the Qs are leading the market. And these legs are kind of starting to flatten out like we showed on the SPY, although these are kind of commensurate in angle. The pullbacks are pretty equal. Another pullback would bring us down around 218, 219 on the QQQ. It's a tough call, man. It's a tough call. I mean, I'm going to keep probing intraday, and I'm going to catch one of these reversals, and I'm going to hold it over and see where we go. But, you know, when you're trying to short intraday as a high, and the high intraday is the close, I don't like carrying big positions over into the close. You know, I don't want to have my face ripped off in the morning. So I'm looking to short it, right? It's not giving me any indication that it's weakening. You know, maybe the last piece right here, but what am I going to do? You know, I'll buy SQQQ, buy a couple thousand at $10.20 and do what with it? You know, I catch this move from 10.20 to, I don't know, 10.35, 10.40. Maybe tomorrow we hit 10.55, 10.60, and then they buy the hell out of it again. So this is a tough market for bears. Like I said, it's going to continue to be a tough market for bears. But like I said, if it's moving, they're buying it. And that's the stuff that's moving. They don't want it if it's not moving. So when does the musical chairs music stop? I don't know. It's probably going to be a change in psychology. So it's a day trader's market. I've been saying that for a few days now. I continue to believe that. I'm not really into buying and holding anything here. We bought some NET. We like this company on the earnings pullback, and that's looking sporty. They dropped us all the way down into here on the earnings pullback. Thanks for the shares at $25.70. I think I bought them at on this channel here. Got a little lower than I wanted, and they fired it right back up. In an aftermarket, we're almost all-time highs again on NET. Probably is going to have a hard time getting back above this trend line here. It's a very whippy stock, so I'm not recommending this. It's going to be volatile. You could, you know, any of these days you could go back and retest the 25.80 area, 26, before moving higher. So we got some of that. DraftKings earnings coming out. We've been buying that on weakness and selling it into strength. Some of these real estate stocks that I'm holding, man, they're not looking too good, guys. I don't know. RWT, TWO, they remind me of like the Boeing JP Morgan. I mean, I don't know how much longer I can hold on to these. I'm looking for turnarounds. I bought some Norwegian today, only because it's in the spotlight. A little contrarian play. This market's, you know, I'm more like a contrarian kind of guy, and this market's more of a momentum kind of trading thing. So I bought 1,000 shares. I almost caught the low for the day. I sold some into the close, and I'm holding some into the earnings call. I'm sure they're not going to say anything horrible. I bought a little S-Dow at the close. Just I need to have a hedge when I wake up in the morning. Where the hell did that come from? Let's clear the drawing set out here. What the hell is that? That must be a Fibonacci. Sorry about that. Bought a little S-Dow, you know. It's a leverage ETF inverse of the Dow Jones. I'm picking on the Dow. Looks ugly, so why not pick on something? I just need a hedge. I got a lot of longs still here. I got some NWA, NET, some of these real estate trusts, and then I have some good longs, you know. We got some of the stuff like KTOS has been a nice mover. GBTC pulled back. We got our EVFM, DraftKings. You know, we have Nuance Communications. We have Boston Scientific, but it's getting a little harder. You know, we're lightening up on our shares, and rightfully so. Eventually, we're going to be in all cash, just day trading only. I don't like the movements I'm seeing in the markets here, and I don't like the way that money is just gravitating towards the bubble stock. So I'll keep you guys updated later if something jumps out at me. But you can see that the money is really gravitating towards the more speculative stocks, and that's not a healthy sign for the market. That's actually a bad sign. So we'll see how it goes, and I'll keep you guys updated.